So a very good morning to everyone. Hope you all had a great evening. So Piers is off the desk at the moment, so I'm going to take you through the morning briefing for this morning. I think most appropriate place to start is the fact that we're slightly higher at the moment. European stocks off to a fairly positive start this morning. I think a lot of that movement is coming on the fact that we did actually close higher on Wall Street yesterday. If we just take a look at the S&P chart, shorten the time frames here. So when we left the market yesterday in terms of European traders, a lot of the focus was on oil prices. I think most of the time, or when most of us clocked off, we were threatening around the $30 handle. That actually did see a very brief break. We'll go into oil prices shortly in a bit more detail. Then that was providing a bit of a drag in terms of US equity markets. However, it did bounce thereafter in oil prices, found a bit of a floor at that $30 handle. And this morning we are trading off that by around $1 or so. And as such, Wall Street did see a bit of a recovery, and that did continue in the overnight session. The Nasdaq was the outperformer. Apple was subject to a positive broker move, them being one of the biggest companies in the world. When they do move, it does tend to take the market with it on a sentiment read, but also on the index point weighting. So the Nasdaq did finish up around 1.2%, and the Dow and S&P were up around 0.75%. But in terms of that positive tone, you can see overnight we've added to the gains in terms of US stock futures, and hence this positive gap up we've seen in likes of the DAX and Euro stocks. We did have Chinese data overnight. That came in the form of the trade balance numbers. Actually were better than expected. So I think there was a lot of pessimistic people out there thinking that given the fairly downbeat news articles and data points and intervention tactics that we've been seeing, fears were that we were going to get a poor reading. That wasn't the case. In fact, in terms of the actual export number, that was a surprise as it came in positive. So in terms of that, it did buoy the Shanghai Composite at the time. In terms of the currency markets and the read across, the Australian dollar, which is often seen as the proxy for strength in China, in terms of the fact that Australia rely very heavily upon relationships with China in their industry, and as such Aussie dollar is still up around 50 pips at the moment, albeit just off the Asia Pac highs. But in terms of the classic style of the Shanghai Comp, it hasn't managed to hold on to those gains. In terms of the close, it did see some late selling. The actual loss on the session was around 2.4%, which isn't massive by any means compared to some of last week's volatility. What we often see is when Europe comes into the market at around 6 a.m., that is still around 2 hours before the Shanghai Composite actually closes. So a lot of the time you do see a bit of added momentum in movements and late movements in the Shanghai Comp, given the fact that Europe and UK are coming to the market. And that appears to have been the case once again. So although Asia was quite enthused by the data released, overall, that's not really been too much of the focus. More so, it's been the fact that HIBOR, which shot up yesterday on the fact that China continuing to look to counteract this kind of selling of the offshore yuan, that spiked by around 53% yesterday. So it was up in around the mid-60% range. That actually dropped back down drastically overnight. Otherwise, in terms of the Shanghai Composite, to put in a bit of context as well on where we stand at the moment, sub a 3,000 level. So that's the first time we've been below 3,000 since August. Of course, that was when we had that summer volatility and those crash in the Asian markets, in China in particular. Moving on then into oil, because that undoubtedly is still the focus. When I'm reading articles this morning in much of the major press, same as what Piers was talking about yesterday, journalists do love a negative headline, particularly when you've got the likes of calls to $10 as we had from Standard Chartered yesterday. Telegraph, they've picked up on that particular story, but just looking at context of where The last time that we were close to $10 an oil was back in 1998. So these would be huge levels if we were to get there. You can see on this graph. Otherwise, let's just take a look at how we initially did make a test on those lows here in WTI crude. Again, it came just after around 6 p.m. London time. Didn't really make a clean break of it. In terms of today, although we're around $1 off there, it wouldn't surprise me if we had another stab at looking at that $30 level, but it's pretty huge psychologically. I think we'll see some pretty good support around those levels, but if it were to be taken out at any time, I think that would really open up quite an aggressive run lower if that were to be the case. In terms of below here, probably the case that we'll look at 25 and then 20, those kind of $5 increments to the downside if that were to go. Technically looking here, we've been seesawing around the pivot level. Again, we've always had that kind of bias tactically of shorting or longing at the pivot. I think today that's probably lesser of a case given the fact that we're just oscillating around the level. More so on the upside, that R1 level looks pretty good in terms of potential first resistance levels, and then those highs we had yesterday at around that 32.21 above there. In terms of the pull off the low though, there was some news which did come out around the same time. That was in regards to Iran had seized 2 US Navy boats and crewmen for illegally entering Iranian waters. So whether coincidentally or not, the timings do roughly work out around the same as this bounce that we saw that was going in towards the NYMEX pit close. And so far in the articles that I've read this morning, we've had those sailors that have been detained. That is still the case at the moment, so likelihood is we could see some further headlines on that. But at this point, not really expecting that to have too much of a further reaction on the markets. One thing we've also just heard on the squawk as well is that Iran say they're unaware of any call for an early OPEC meeting. Of course, we had the likes of Nigeria saying that 2 people, probably Nigeria and Venezuela, are looking to push for an emergency meeting, particularly given that they're 2 countries of OPEC nations were getting squeezed by these low prices. But again, it is really the major movers and shakers, i.e. Saudi most notably. We haven't really heard much from them. If they were to say something, that would be a real mover for the oil markets. Iran's one of the bigger producers, particularly when they come back online. And they've already said this morning that they're unaware of any call for an early OPEC meeting. Just moving back to equities though for a second. You said the DAX up pretty firmly this morning. Just looking back at the S&P, again, we did see that late rally on Wall Street, as I said. If we just make the chart a bit longer term, you can see the dramatic sell-off that we've had pretty much since the off in January. So it's not that unsurprising to see a bit of a relief type rally, particularly when those sentiment stocks, as I mentioned, like Apple, take a bit of a boost. Now, there'll undoubtedly be some calling for the other side of the coin in regards to these persistent low prices. Could well provide a bit of a global economic stimulus, could add to growth, given that low oil prices is actually beneficial on that side of things. However, we are of course going into earnings season at the moment, although it's been pretty quiet on that front, as is typical in the first week of earnings. That will pick up a pace next week. But obviously those energy and material names likely to be hit quite hard for Q4 2015 earnings. A lot of the things I've been reading is about the performance of consumer discretionary names in particular, given that they've felt a bit of pressure due to unseasonably warmer weather, and whether or not that could affect things in earnings season is yet to be seen. So just moving on, taking a look at a few other things. In terms of the calendar for today, it's pretty quiet again in terms of the actual calendar for this week. it's been quiet on data pretty much throughout. Friday's the real main day when we'll be looking out for US data in particular. Friday sees retail sales, PPI, Michigan, business inventories, industrial production. So it's pretty much wait and see on the data schedule until that time. But in terms of today, nothing really major out of UK or Europe. We do have industrial production out of the Eurozone. That's probably the main release for Europe, but not really much in the way of market impact for that release. The API numbers, they'll probably be one of the main things to look out for, or excuse me, the DOE numbers. Just to recap, we did have the API data last night. That did show a headline draw of 3.9 million. So that could also be another slight supporting factor for crude oil this morning, just sitting above the $31 handle. In terms of the actual release last night, we did actually see oil prices move slightly lower despite that bullish headline figure. That was because gasoline showed an extremely large build of 7 billion. So it just goes to show, much in the likes of payroll, it's not always just the headline figure that can move the market. Quite often it's the components you need to keep an eye on, none more so than with oil figures. So we do have the Department of Energy's release later, usual time, 3:30 p.m. this afternoon. The surveyed estimate is for a build of 2 million. However, as is typically the case, we'll use the APIs as a bit of a better guide. That headline was a draw of 3.9 million. So any sizable drawdowns there on that headline figure in today's oil inventories, and if the gasoline number isn't quite as big a build, that could be supportive and keep safe that $30 handle for the meantime. So probably for any real oil traders, unlikely that we'll see maybe a test of that key level on the downside until that data is out of the way. And then from thereafter, once that hurdle has been crossed, whether it provides a catalyst or not, we could well make another stab on the downside. Otherwise, that pretty much wraps up the morning's events. So I'll be here throughout the morning. If you have any questions, please come over and ask, or just ping something in the chat. I'll be more than happy to help.